Hey guys, Mike here. So we got a jam-packed video for you, and it's really jam-packed. So I'm gonna try to get through it as fast as possible, and some very important things. I'm telling you, you want to see this because I don't want you making investment decisions or trading decisions off of false narratives or anything like that. Okay, so in this one, I'm gonna actually go through and show you. Really, it's one pattern you need to be watching out for going up through around September, October. Okay, make sure, and I'll show you why you need to look out for that. Two, I'm going to dispel a notion that's going around Twitter and all over YouTube because, you know, these people who are putting it out are too lazy to actually look at it correctly and show it to you. So I'm going to dispel that myth in about 2 seconds, all right? I'm going to show you exactly what I'm talking about, and you really want to see that one. And then we'll go over what the S&P did on Friday, which is important, okay? And also, you know, some very important news for the semiconductor stocks, which is what this, you know, big rally's kind of been about, right? All the AI hype and stuff. And then we'll go over earnings, and then of course we will have some major news coming out next week, which will affect the markets. Now, understand, I told you I should bring this to you, so I will get it from my friend Charlie Baleo on Twitter, who puts this out and is very good. And this is that sell in May and go away stuff, right? And you can see May through October, the returns usually are less, right, versus November through April, considering like the 6 best months there is out there. But as I've showed you, the last 10 years, it's like a 60-40 split, 60 being good, 10 being either flat or red, right? And you can see this is the percentage of positive total returns from 1928, 2023. I don't care to go that far back. I just really care about since 2000, maybe forward or something, maybe 2010 forward. But take it for what it's worth, right? And another thing you're going to have coming out, which I found interesting, I was talking to members about this one. When I looked at this chart, there was something else I had noticed about it I didn't notice before. You see everybody's talking about stock buybacks, right? Because Apple announced the record one. Well, here we are now. That's the most recent. That's 2018. It's the only higher point you actually have, right in there. But what I noticed on this is, so we're going to have a lot of stock buybacks, right, this year and next year and stuff. But what I noticed, you notice the biggest peaks? You notice when they are? It's when they're in a year we're going to actually have a major pullback, right? Because if you look, that big peak over here, that's 2022. The one to the left, the biggest one's 2018. We had 2 big pullbacks that year, right? The other one's 2015. We had a big pullback. This right here, right at the end of 2007, when we had obviously the crash, a great financial crisis, happened right there. So I just found that very interesting that that's the peak. Not that this peak on the very right is not going to go up further. It probably will. But, you know, I just happened to see that when I was looking at it. But again, that's obviously, as I showed you the other chart, talking about $5.5 trillion in stock has been bought back since I believe like 2000 or something. And it's been one of the biggest drivers, right? You can imagine. And so that's going to be another catalyst for stocks, whatever, if they keep doing that. Now, understand with the S&P here, and this is what I'm talking about, be looking out for this. You can see we're in this really huge rising wedge, right? Again, don't worry about what any of these patterns are called. That's not very important at all. But what I want you to look out for, more importantly, as we kind of try to look at this, is something I'm going to show you. The question is, obviously, are we going to double top or continue to go higher? If we continue to go higher, I've seen projections anywhere from 5,400, 5,600. Again, it'll put us somewhere at the top of this channel, right, depending on when it hits it and stuff. And so one thing you'll notice, and I'll show you very quickly on the other charts, because a lot of people are saying, you know, the Fed's going to be cutting, right? What happens when the Fed's going to cut, and you know the labor market softening and all this stuff, right? So we could have the market roll over. So what you want to start watching for is kind of like a head and shoulders type pattern. Again, it's going to be ugly. I'm going to tell you right now, it's going to be ugly. But what you're looking for, and I'm not predicting this is going to happen, I'm just telling you to watch out for it. If you start to see it happen, again, here's a nice little shoulder. If we come up and we tag this trend line again and we keep pushing higher, right? That gives us our head. Then maybe we come down. Again, it's not going to be straight down, straight up. And then you get a right shoulder fill out, maybe test that trend line again or test the neckline, whatever it is. And then we start to move back down, right? And we start to sell off. Now, when you look at that, the funny thing is, when I didn't do this on purpose, when I looked at that, I said, oh, wait a minute, when does that line up? That right shoulder at the end of it? September. That's when the first rate cuts are predicted to happen, right? And again, I'm going to dispel a notion about rate cuts in just a minute and how the market works and stuff. But again, just watch out for this pattern. Why do I say that? It's not pretty, okay, at all. But when you look, here's 2022, right? Again, we come down, there's your left shoulder, head, and there's your right shoulder, boom, there's the neckline, and we crash down. None of them are pretty, but you see this where you get this head, and then it comes down, and starts to come back up, but it doesn't break the other high, right? That's why people call these head and shoulders, or whatever pattern you want to call it. It don't matter. But anyway, that's what you're looking for, okay? And a lot of times it'll come up, you'll see it, it'll test the neckline or whatever. But When you come over to 2020, that doesn't count. Why? Again, we're in a rising wedge because it was a 30-day crash. We shut down the world. It freaked out. Did not happen, okay? Just in full transparency. Now we're coming to 2018. This is the other thing to look out for, because this is something you see as well when you go back through history. We're in this rising wedge pattern, but when we come up to the top and zoom in, I don't see any kind of head and shoulders, right? What I do see, though, a double top, relative equal highs, whatever you want to call them, right? It sets a high, then it comes back up, and it cannot break that high, all right? And then we crash down, break this rising channel. Usually this is going to happen, a rising wedge, and then away we go, okay? The other one right here, 2008, what do you see, right? Here's a head and shoulders, right? There's the left shoulder. Again, that's the head because it's higher than the left shoulder. It comes up. Again, these aren't pretty. They aren't really that textbook, right? But again, when you look over, the neckline somewhere in this area right here, and this one actually did come up and retest the neckline. And then, of course, we went into the '08 crash, okay? And so, like I said, make sure you keep in mind, it's not going to be pretty. What you're looking for is a high on the left to be broken by the high in the middle, and then another when it comes down to come up and fall short of the all-time high. That's what you're looking for, okay? Again, .com, you can see right here, boom, comes up again, doesn't break it though. Here we go down, we end up coming up to the neckline again, and then of course this is the .com bubble. So this was a long drawn out crash, as we know, okay? So this is the pattern you're going to be looking for going forward. It could take weeks, it could take months. So look for a double top, or look for this to try to play out. And again, you will pull up moving averages and all that good stuff, because nothing good happened below the 200 to really kind of confirm everything. Now, when you look currently where we're at, right, that's where we're going to be at. So if we do grind higher, right, and hit this thing, come back down, and again, it's not going to be pretty, but at some point in time, if we end up breaking this wedge, right, which we've been in for quite a while now, that will be very, very bearish, okay? We have bounced off it multiple times because it's been going on for so long, right? And so something like this wouldn't be surprising me if that's what you're going to see. So just keep that in mind. Again, not going to sit and go, oh, Mike's predicting we're going to crash. Whatever. Nope. Just trying to tell you what to look out for, trying to look out for you. Now, to dispel this notion of, oh, when the Fed cuts, that's when we crash, okay? I'm going to show you the last 3 rate hiking cycles. You make a decision for yourself, but I'm going to show you clearly. There, as I told me, I just did a video on this. For the members, there's no rhyme or reason to this, okay? And in fact, it aggravates me. And on this channel, we tell the truth and show it to you so you can make a decision for yourself, because that's what this is about. But it aggravates me when people are too lazy. Not you guys, people putting this stuff out there on Twitter and YouTube to actually just pull up a chart and pull up the Fed's fund rate over the S&P. That's all you got to do. I mean, look at this. Here, right here, they cut, right? They cut in July of 2019. A lot of people remember this. But what did the market do, right? Market came down and then just kept on ramping, right? You see it plain as day. What happened in 2008, though? Actually, 2007 when they started to cut. The market pops 5%, right? Drops 11%, and then proceeds to go back up after that, okay? And then drag on. This takes place over like months. Okay, this isn't like days or anything. Just keep that in mind. And then pops up 11% and then trades sideways, and then boom, we end up going for a huge crash, right? Then you look at 2001. The market sold off 4 months before they even did a rate cut. Okay, so again, 3 different rate hiking cycles, 3 different things happen. All right, so keep that in mind. All right, keep that in mind. Now, what did the S&P do Friday? Again, these are key levels. We tested that trend line, which I'll show you what I'm talking about. We came down. We tested 5210 again, right? And then 5200 is going to be the other key level to watch. So 5200, 5210. Okay, so it tested again. It tested it on Thursday. Remember we talked about it twice? And so that is a key thing right there. If it can hold those levels. What did it do the rest of the day? Just stayed in this channel right here. All right, just stayed in this channel, boring stuff, all that good stuff. But it ended up green. Okay, it ended up holding 5210. Which was key, all right? When you pull out, this is the trend line I'm talking about, the one's on the very top right there. Again, it continues to grind up against it. I told you that between 52.10, 52.15-ish, 52.20-ish, like that was going to be, you know, pretty tough sled, but it popped right through. And what did it do? It mitigated this daily fair value gap. I told you about it. What was it, Thursday? See that? That's the kind of reaction you normally get when you hit a big time on a higher time frame fair value gap. That's what you're going to get. And it popped down and then sold off, right? Immediately. You would have thought we were all red for the day because it definitely came down fast. But that's the kind of reaction you normally do get. and it held the key levels. That's the key to continue to watch. Where is it drawing liquidity? That's the biggest thing we're looking for here, right? So look for it to break out of that trend line. Look for it to stay in this channel. Maybe go to the bottom of the channel. That's what we got to find out. Why can this continue to go up? Watch the stochastic RSI on the weekly, the higher time frame, guys. You've got the cross, the bullish cross, right? But the key is it going to continue or is it going to be a fake out? All right? Because you look right here, right? That's straight up, boom. That's not a fake out. It just goes. This is a fake out. It crosses up. You go, we're going bullish. And it turns back over and sells back down like another 5 or 6% or whatever it was right there. All right, but you can see on here, you just go through, pull this up on your chart, study it, because again, you especially, well, if you're in a crash, you get many fake outs, but when you're in an uptrend, you can get a few, but it's not like some huge sell down, okay? So that's one reason you can see it. The other one is, so far the market, the general overall market is ignoring these yields, right? Because the yields are up over 1% today, off of, I'm sorry, not today, but Friday, off of the news that consumer sentiment was in the toilet. I mean, it was hot garbage, right? But it ignored it. Okay, I'm saying the general market. I'm going to show you what I'm talking about the market that's not, the part of the market that's not ignoring it, but it's in the bottom of this channel. So again, if yields go up and we start heading back to the top of that channel, the whole market's going to feel it. Understand me very clearly on that, all right? They're going to feel it. Now, if it breaks out of this channel, like break down, boom. Oh, the market's going to go crazy. I mean crazy up. All right, so just keep that in mind right there. And when I say the overall market, you can see right here clearly what was down on Thursday was up on Friday. Semiconductor stocks, financials, big tech, all that fun stuff was up, the Mag 7. What doesn't ignore this ever? Look at this, real estate, fintech, right? Small caps. I mean, these are the things that don't. XLE was down basically because the dollar went green as well. I think that's why that's hurting. But these other ones, like they feel it when the 10-year pops 1%. They're hurting, okay, and they were red, so just keep that in mind. Now, IWM, on the short-term 1-hour chart, what are you seeing? It's just in this channel. We come down to the bottom, we tagged it, we haven't broke through it, so again, do we start to move back up on this channel? That's what we're going to watch, go back above those 2023 levels. If yields go sideways or down, the answer is going to be a definitive yes, because when you look at the MACD and the RSI, again, you don't really see anything bearish on this, right? The MACD is coming across that zero line. The RSI is above 50 right now. Has not rolled over or anything. And so we'll keep an eye on it stuff. But again, the moving averages, it bounced off the 50, retested it successfully. The 50 is the one on top. The 100 is the one in the middle. 200 is way down. And the 200 is way down at the bottom. Okay, so that was the 50 it retested. Now, one thing I don't want to miss out in telling you is what Taiwan Semiconductor reported. This is why you saw a lot of these semiconductors go green, and it was because their sales jumped 60% in April. All right, it's like 7.3 billion off the artificial intelligence drive and everything, and so they make like 80% of the chips for all these other companies. So if their revenue is going up that much, right, then that leads everybody to believe, oh yeah, these other companies, like they're really going to be putting in, a lot of big gains in the future here. So just kind of keep that in mind. That was a big thing for them. Now, when it comes to earnings, no big names at all that I see on here. Really, I'm talking about Mag 7 type names that have a lot of weight, but there are some important names, right? So Monday's nothing big. Tuesday, Alibaba, Home Depot, C, Sony, Intuitive. Those are some big ones right there. Wednesday, looking over here, not even till the afternoon, really. You got Cisco reporting. Maybe that'll probably be a big one for some folks. And then we come in and look at Thursday, Walmart, Baidu, JD.com. Remember, Chinese stocks kind of been on a tear lately with HSI up so much. John Deere, Under Armour is going to be another one. See how consumers are doing. Walmart tells us how consumers are doing. Applied Materials in the afternoon. Rest of it does nothing. And then Friday, nothing, okay? When it comes to red folder news or news in general, we got some big stuff, right? And a lot of FOMC speakers on Monday. Don't worry about that. They're going to say what they got to say. Tuesday, though, core PPI and then PPI. And then Fed Chair Powell speaks somewhere. I don't even know where he's speaking, all right? But those are big. Wednesday, though, you get core CPI. And so that's going to be big. Empire State Manufacturing. Retails month over month. So Wednesday is going to be a super important day because if that comes in line or underneath that CPI, yields are going to drop, right? Because they're saying they're definitely going to cut, right? So just be expecting that. If it comes in hot, yields most likely will spike, okay? Just FYI. Thursday, the unemployment claims are going to come in again. We'll see how that's going. If it's still heading in the same direction, a lot of manufacturing data is coming out, imports, all that good stuff. And then Friday, not much anything happening there. And so next week will be big. And that could be why the market was pretty muted on Friday. Really just kind of waiting to see what happens. We'll see. We'll see if they pump it Monday or whatever. But and PPI and CPI, they measure two different things, okay? So again, you can get pop one day, drop the next, all that good stuff. But the biggest thing to look for is inflation data coming in line and just like what they expect or under, the market's going up, right? If it comes in super hot and yields really pop, you hear about that, they're not going to do the rate cut in September now. We're going to push it in November. The same game. This is the way it is, okay? So, let me know what your predictions are and what you think and stuff. So hopefully that helps out. Let me know if you like that kind of stuff. I like to at least present it to you and you can do what you want to with it, okay? So hope you guys end up having a good one. Please hit the like and subscribe button on the way out, and I'll see you guys later.